Let's bring in Dan Clifton. He's head of Washington policy research at Strategas. Dan, welcome. First of all, does the price tag of the Senate bill come down? Do we know yet?
Well, it's going to be roughly in line with what the House bill is going to be, but the allocation, Kelly, will change. What this bill does is it makes all the business tax cuts permanent, but it actually gets rid of some of the short-term stimulus for the consumer. Higher child tax credit reduces no small business deduction at a higher rate of 23%. So what you'll see is a more level type of budget deficit over 10 years. But overall, the price tag won't be meaningfully different than what the House bill was. So they're consistent in that respect, but they take very different approaches here, Kelly. The House bill tried to do what I call a field of dreams bill. Build it and they will come. They put a lot of different provisions in there to get there. And what the Senate bill released last night does, it says, what was the Tax Cuts and Jobs Act in 2017? Let's take all of those provisions, make them permanent. We'll throw all the other stuff out, and then we'll pay for it with some of these other cuts. And I would look at that Senate bill as a baseline. It will change. It will change in committee next week when it goes up in committee. It will likely change on the floor through the Senate amendment and budget vote-a-rama process. So it's going to get modified. But our big concern is now that you've started this process over, the economy is slowing here, the debt ceiling is looming, you don't really have a lot of time to start this process over, and you want to get this bill passed so you could sterilize those tariffs that are already being enacted and really being paid for. And we could see that in the Treasury data every day.
Right. You see this, many see this as kind of a little stimulus piece for the economy, which as the consumer reacts to tariffs. Speaking of which, on that front, a couple of weeks to go until the tariffs are potentially going back up to those Liberation Day levels.
Yeah. So if you look at what's going on, I wasn't really of the belief that Trump was going to get a lot of deals at the G7, but it creates the opportunity for deal making, and the president loves making those negotiations. So in our view, we were setting up a stage for an agreement to have future agreements down the road. And my sense is that we're just probably going to build more roadway here, just extend out some of the July 9th for some countries. Another option is that some of the rates go up a little bit, right? They don't go all the way up to their April 2nd level that the president proposed. But if you're negotiating in good faith, the level goes up a little bit and you continue to negotiate. But what the president is asking for is what are called rules of origin requirements. Those rule of origin requirements say to get a lower tariff rate, the product can't be made so much in China. Mexico and Canada have those rule of origin requirements in place. Other countries do not. So if countries don't agree to that, interestingly, Mexico and Canada are going to be the big winners here because the other countries will get higher tariff rates and the onshoring will then move into Mexico and maybe even parts of the U.S. and Canada.
Which, for what it's worth, was some of our guests' predictions back in January, February, that this would ultimately be about kind of talking tough with Mexico and China or Canada before bringing them to the table with a stronger North America than vis-a-vis the rest of the world. All of that to the side, Dan, what do you make of the president's latest comments about Iran and the direction that that's going as these two other major questions hang in the air about the budget bill and tariff policy?
Yeah, I'm still very much of the belief that the president doesn't like war, that he wants peace, and he wants to get this resolved. But if you look at the comments that have been made throughout today, it feels as if the scales are tipping to him actually joining with Israel when he's using the word we and when he's doing other factors of arguing that we have control of the skies or complete surrender. So it feels like the balance is tipping here and it's moving in that direction. It could be a negotiating strategy. But when you start saying get out of Tehran, last week they were saying get out of the embassies and eventually attack came. We have to take the rhetoric pretty seriously here that it's moving in this type of direction. So from that perspective, I think it's getting a lot more serious, and we can talk about a tax bill, we can talk about trade, but it feels like this is going to be the big issue, Iran, Israel, over financial markets, over the energy markets, and of course, by nature, over the equity markets.